Hi, welcome. It's Mary Ellen McGonigal, Senior Managing Director of Stocks here at Simpler, with your weekly Edge show for Saturday, December 18th. Let's take a look at our agenda. First up, we are going to take a look at some of the more impactful news that really drove price action last week and also is anticipated to drive price action going forward. Also, we'll take a look at the current markets and then beyond. Take a look at some of those sectors, industry groups, get a really good handle on where the current relative strength is. And I'll also share with you why, as an eye toward looking out into the future. And then viewer question of the week. And I will share with you a question that came to us relative to taking a look at stocks in the Dow Jones Industrial Average. We're going to take a look at some names there where the strength, again, relative to weakness and why. Really all about helping you formulate a plan not only for next week, but also beyond into next year. So let's go ahead and get started. Last week, the most impactful news was Fed Chair Powell's announcement that the Federal Reserve is going to shift their monetary policy. They've been very generous with their bond buying, which has provided liquidity and boosted the markets, and they are pulling back from that, tapering their bond buying, and then also raising interest rates sooner than anticipated. So a bit of a shock. We'll take a look at where areas were impacted on that news. And then earlier in the week, we did see that wholesale prices rose in November. And of course, as wholesale prices rise, it will increase costs down the road to the consumer. So more news as it relates to inflation being on the rise. And in fact, that is the one metric that drove the Fed to shift their monetary policy, was this increased spike that we've been seeing in inflation. So also last week, we did get news about retail sales in November. It did soften a bit. And the thinking is that it was because prices have risen in the face of inflation. And we have seen retail stocks really get hit quite hard as a result. So from here, let's go ahead and take a look. Where did we close the week? So here's a daily price chart of the S&P 500. It was down about 2% last week. You can see that into that Wednesday Federal Reserve announcement, the markets were firming up quite nicely, but subsequently have sold off. The S&P has found support at this 50-day simple moving average, however, that is constructive. And then your outside momentum indicators, your RSI dipping into negative territory, while your faster moving stochastics are still up here in positive position. So definitely a mixed close into the markets. But again, there are areas and pockets of strength that I will get into as it relates to areas that are holding up in an otherwise really rather difficult market. So from here, let's go ahead. I did want to share with you the Nasdaq Composite, a little bit weaker here. It was down the most, over 3% last week. Of course, this tech heavy area as we move forward, I will share with you where the weakness is emanating from in the Nasdaq, but more importantly, it did close the week here below this 50-day simple moving average. And what we've found over the near term here is that 15,000 has been the firm area of support. So we did close just above that, 15,036. So we are continuing to hold support for now. However, your outside momentum indicators are negative. The RSI trending downward, likewise with that MACD. A lot of these higher growth, faster moving tech names are generally historically do not perform well during periods of higher inflation, and we'll get more into that here as well. So let's go ahead and take a look at the underlying sectors in the S&P 500, and what I've done is added an RSI, that's a relative strength indicator, and sorted it in descending order. The purpose here is to uncover where that relative outperformance and strength is up here in the forefront versus your weaker areas down here in the lower right quartile. So first up, we can see that healthcare is up here. I talked about this last week where healthcare did begin to reverse its downtrend. In the next segment, I'm going to share a really hot pocket of strength there within healthcare that is surprising, but very much helped move healthcare stocks higher. And then also the other areas up here in the forefront, we can see consumer staples, utilities, and REIT stocks. And generally speaking, these areas, in fact, all four, are viewed as defensive in nature. They either provide products that individuals need regardless of the economy, but there are other reasons that we are seeing particularly staples, utilities, and real estate up in the forefront. Has everything to do with higher yields that these stocks offer, and high yielding stocks are very good defense against inflation. You're going to continue to see a rise in many of the stocks underlying in these areas, so that is something that I would look out for going into next year. And then let's take a look. You want to make sure you're not overweighted in some of these weaker areas. I mentioned retail sales numbers down. A lot of retailers getting hit this week. Tesla is a big component of this is XLY, the consumer discretionary sector for the S&P 500. Tesla was down over 8%, and that's a heavyweight in here. And we can see the group now is broken below this 50-day simple moving average, and that's generally viewed as support, whether you're looking at a stock, an index, or a sector. We can see that the RSI is negative and trending downward, so the prognosis for many of these discretionary retail related stocks currently has been weak, but is currently getting even weaker. So from here, let's go ahead and take a look at some of the sub industry groupings behind these sectors. And this is where I'll share that relative strength versus weakness. So again, that RSI, and as we move forward, I'll share with you some of the indexes that I find quite useful in helping get your arms around very quickly what is taking place in the broader market. So first up here, I talked about healthcare having a surprise move. Well, actually, this industry group was what was surprising, and that's biotech, IBB. Now, this is the Nasdaq Biotech ETF, so a little bit faster moving names in here. But what we can see is this potential downtrend reversal. The group was up 5%. The surprise here is because biotech stocks generally are viewed as riskier over the 550 names in the group, and less than 10% actually have any kind of earnings. So you're really buying the hope, if you will, of the development of a new drug. So we can see again, it's had this nice potential move off of the bottom. However, it's just now at this 50-day simple moving average. I will want to see it break above that, and then ultimately back above that 200-day before turning constructive. We did have a head fake here, but a move into these riskier biotechs could really help the markets in the way of helping provide potentially the first leg of many that are needed to really get these markets going again. We can see the RSI up here in positive territory, this MACD, a moving average, convergence, divergence, had this nice black line up through the red. That's generally a momentum shift indicator, but we are not out of the woods yet. We'll keep an eye on that. I have about 10 names in this group that are on my watch list so that when it turns, we'll be ready to take advantage of that. And by turn, I mean when it turns bullish. So from here, let's take a look at some of these other areas. First up, the volatility. It is still up here above 20, which for a lot of people is kind of that line in the sand, if you will, indicating more potential volatility into next week as the markets continue to sort through Fed Chair Powell's comments from last week. But on to some of these weaker areas, semiconductor stocks, they were down quite a bit last week, and this is an area that had been holding up, but they were sold off 4% and more, and it is still up here above this 50-day, but your outside momentum indicators are trending downward. And I did mention tech tends to hit a rough patch when we are in a period of higher inflation. So one other area that I have been talking about for several weeks now, and this is software. I use IGV, that software tech ETF, and you can see a lot of damage has taken place. This is another area as inflation rises, these higher growth software companies' value of their future earnings declines in the face of inflation. So I fully expect this group to recover and resume its uptrend. However, at this point in time, it does not appear to be something that's going to occur anytime soon. Your momentum indicators very clearly still heading south. So let's go back to that sub-industry grouping and get a feel for some of these other areas that are weak as well. Again, making sure you're not overweighted. This is the Russell 2000 small cap, and we can see small caps continuing to deteriorate, down about 2% last week, so very much in a confirmed downtrend. Another riskier area of the markets that we would like to see reverse and give a sense that investors' confidence is back in place so that the markets can get going to the upside again. So let's move on to our viewer question of the week. And what we are looking at here is a daily 2-month price chart of the 30 stocks among the Dow Jones Industrial Average. So I've gone ahead and added that RSI again. We want to see where that relative outperformance is, and then in descending order. So let's just take a quick look here, and I'll share some insight into some of these names. Amgen up here in the forefront. This particular company is a heavyweight among those biotechs, and you can see it's attempting to reverse this downtrend. This gap up here early this month was all about a Goldman Sachs upgrade due to the company's pipeline, and we can see it was just the news needed to propel the stock into a nice uptrend. A break above this 200-day simple moving average could easily lead to further upside with Amgen. Another stock that I did want to share with you is IBM. This is another potential turnaround candidate, and again, finding resistance at that 200-day with your outside momentum indicators constructive. So I would need to see a break above that 129 before anticipating further upside there. And then also Verizon, they had good news. It's a down and out name, but trying to turn. There was news that they are partnering with Google with their 5G mobile cloud computing. So good news there, lots of volume on over the last 2 days. But again, this is going to be your next speed bump here at 54, but certainly worth noting as it relates to further upside. Cisco is in one of the few strong areas in technology. We can see that Cisco had this nice base breakout this week on very nice volume. So very constructive looking. It is in networking, and that is that one area in tech that is not only holding up well, but does have several compelling looking charts. So from here, let's go ahead and drill down and take a look at some of these weaker areas, and it's going to really marry what we've been talking about earlier as it relates to retail sales. This is Nike, broken down below support this week with negative momentum on that RSI, and then that MACD now in negative territory as well. One last name to share with you confirming that downtrend in software stocks. This is Salesforce. CRM is the ticker symbol, and really it's very much in line with the group, a bellwether name among software, just struggling. It's going to take a bit of work to get these software guys back, but I am anticipating it will occur. So that's it for this week. Everyone have a great weekend, and I will see you at the next MEM Edge Show. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.